My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Friends, I'm just trying to make a little money. My job is not just to entertain, but to educate. So call me at 1-800-743-CBC. Tweet me at Jim Cramer. We had two sessions today. The first one was a great one, where Apple was soaring off its better-than-expected quarter. NVIDIA stock was fighting its way higher, and anything tech got taken up with them. But then we had the second session, dominated by anticipation of the White House slapping tariffs on Mexico, Canada, China. Sure enough, at 3:46 p.m., we got 25% tariffs on Mexico and Canada, 10% tariffs on China, and the market, which had been sagging, just slumped into the closing bell. Sell. Yep, that second session held sway with the Dow sinking 337 points, S&P losing 0.5%, Nasdaq declining 0.28%. Oh, and adding insult to injury, by the way, President Trump later came out and said he was, quote, not concerned about the market's reaction. I wish I had that luxury. We have a lot to cover, so let's go right to the game plan for next week. All right, the fireworks start on Monday. Well, of course, we'll have to worry about the fallout, right, of the tariffs. But Palantir's reporting after the close. Now, Palantir's a really odd duck, so we're going to spend a second on it. Data-driven consultant that helps everyone from packaged goods companies to the Pentagon to get more out of their resources. Right now, they're focused on fixing the military procurement system. We give way too much business to a handful of defense contractors, and it jacks up the price of all the hardware we, the taxpayers, pay for. Now, Palantir's volatile, unabashed CEO, Alex Karp, is a messianic figure to some and a Pied Piper to others. He caters to his retail investor base, and the stock's a levitator. I call it GameStop with the brain. I've been saying it's going to 100 ever since it was in the 50s. Now it's at 82, shows no sign of letting up. Mark my words, $100 or bust. Tuesday's jam-packed. All right, now we start the morning with PayPal and Spotify, both of which could have terrific numbers. PayPal's now being captained by Alex Chriss. I think he's returning the company to solid growth mode. Now, PayPal used to be the king of digital mobile payments at one point, but then it fell in hard times as it frantically tried to play catch-up to the buy now, pay later crowd. I believe Chriss can restore the growth rate and the luster because PayPal serves as the digital wallet that often is the first interaction that young people have with the payment system. Now, Spotify is a classic beat and race story that tends to blow away the estimates. I love these subscription businesses. You know that. Think Netflix, Amazon. Because of Prime, and Spotify is always in the conversation. We also hear from two huge drug companies, Merck and Pfizer. Merck, despite some excellent acquisitions, is still all about Keytruda, its revolutionary cancer treatment that just keeps working against so many different varieties of the disease. I bet the numbers will be good, but there are other issues. I also want to get more of a readout on the drugs that Merck picked up in its recent wave of acquisitions, one for pulmonary arterial hypertension and a whole immunology franchise. Pfizer bought Seagen, the old Seattle Genetics, at the end of 2023. We still haven't seen the breakout anti-cancer drugs that would justify the deal's $43 billion price tag. Now, maybe we'll hear something good this quarter. If so, the stock could soar. Very little downside at these low levels. The packaged food stocks have been dogs, ever since the GLP-1 drugs burst on the scene, especially PepsiCo, one of my faves, with its soft drink and snacks businesses. I think the new weight loss drugs make it hard for this great company to play offense. Hasn't helped that the supermarket has become an inflation battleground. But PepsiCo yields 3.6%. You never know when you can catch a total rotation into this beaten down group. Then again, if you want yield in this market, I'd much rather own Merck or Pfizer. After the close, Alphabet reports, and we want to find out if the search business is being cannibalized by its Gemini AI offering. I think YouTube is just on fire. And that covers up any weakness. The new CFO, Anat Ashkenazi, you might remember she was at Eli Lilly. She tells a terrific story. We'll be listening for anything about the growth of Google's cloud infrastructure business. If it is strong, the stock will fly. AMD's been quiet of late. Now, I wonder if the chipmaker has landed some big wins because in the wake of this DeepSeek affair, which proved AI outputs can do more with less computing power, AMD's cheaper GPUs suddenly look a lot more attractive versus NVIDIA's best-of-breed chips. All right, that's my thesis. Now let's see if it's true. Now, we've been focused on a handful of great restaurant chains lately, especially the incredible rally in Brinker, which you know is Chili's. The premier growth stock in the group, though, has always been Chipotle. but somehow it's been lost in the shuffle here. Now, maybe this is a chance to get back in before the next big move higher. Buying Chipotle on weakness is generally the right call, like forever. Of course, it has a new CEO, Scott Boatwright, but he's an old Chipotle hand. And the rest of the crew's intact, including friend of the show, Jack Hartung, former CFO, now President and Chief Strategy Officer. It might be time to start a position. Wednesday, we get results from Walt Disney. Now, recent weather events could bring noise as hurricanes impacted Disney World last quarter. LA wildfires luckily impacted the outlook for Disneyland this quarter. But I think everything else is hitting on all cylinders, including linear TV. Stocks soon can put in its recent weakness behind it. Disney is historically cheaper, which is why we've been telling members of the investing club to buy it. Novo Nordisk. Okay, now this is really interesting. See, this is the drug company behind Ozempic that they report. Now, maybe they can give us clarity about how well these drugs are doing, because Eli Lilly has already announced soft fourth-quarter sales, but expects a very good 2025. Remember, we heard them when we were out in San Francisco. I'd like to hear the same thing from Novo Nordisk. If you do get good news from Novo Nordisk, get this. You might want to buy some Eli Lilly before it reports on Thursday. After close Wednesday, we hear from Ford Motor. Ford's been a disappointment, largely because of warranty costs, things that went wrong. But with long-term interest rates high and likely going higher, their sales could be stalling. The stock's been awful, so there's limited downside at these levels. I question the upside. Thursday, more drugs. Yes, this is a tough drug week. Or aforementioned Eli Lilly reports. While CEO David Ricks announced here on CNBC that 2025 will be a good year, we got to get some more details before we plow in. I remain steadfast. We have a big position for the trust. Next, another trust holding, Bristol Myers. They got a whole series of great drugs. But the one people are watching very closely is Cobenfy. That's the first new class of schizophrenia medications in 30 years. Far fewer side effects than the current standard of care, if you want to call that a standard of care. I bet CEO Chris Borner will give us an early read on prescriptions written this year. Now, this could be a nice upside. And I've got to tell you, with that yield, it's one of my faves. After the close, Amazon reports, although I predict terrific numbers, they might not be as terrific as they have to be to justify the stock's incredible recent run. We own it for the Chapel Trust, too. This is like our Chapel Trust week forever. It's a bonanza. But you may want to wait until after the quarter to do any buying. I'm not being negative. I'm just saying I don't want you after this big run to come in and then there'll be this give up because people are just taking profits. That's when you want to buy. Finally, on Friday, we get the Labor Department's non-farm payroll. And right now, the Fed's concerned that the economy might be running too hot. If we get robust job growth with higher wages, then I doubt we'll see any rate hikes in the first half of the year. If you're rooting for a higher stock market, what do you really want to see? You want a so-so employment report, enough to keep rate cuts on the table, but not so much as to hurt quarterly earnings. Bottom line, when you get a week that's packed with important earnings reports and the monthly employment report plus the tariff news, you're usually better off sitting on your hands because there's just too much data for any individual to process, even for an AI-powered individual. By the way, let's just throw in this DeepSeek stuff, which has made tech too maddening to buy or sell and too, let's say, boring. So, if in doubt, do nothing. I want to go to my home state. I want to go to Sam in Pennsylvania. Sam.
Jim, how are you doing?
I'm all right. How are you, Sam?
I'm good. I got an interesting company for tonight. That is the Fair Isaac and Company. Company's trading at $45 billion, which seems fairly well cheap for the company that is one of the most important when it comes to consumer lending. Companies outpaced the S&P for the last couple of years, 5-year return of 365%. So I'm curious what you think about FICO in this age of AI where consumer lending and all this data.
I got to tell you, we love FICO. We did a lot of work on this company. We came back, and then we had Will Lansing on. I got to speak to Will Lansing. Someone put me on the phone with him when I was out at a really beautiful hotel in Montauk, and we were just talking to the guy. The guy is dynamite. He is a serious practitioner of the game. Michael in Tennessee. Michael.
Mr. Cramer, how about those Tennessee Volunteers?
The Vols.
My question is, with the increasing demand for copper driven by the energy transition and electrification trends, do you see copper mining stocks as undervalued plays right now?
No, I do not. I keep thinking about Simone Janikowski when she came on the show. A private company that's going to use glass. I'm so afraid that one day we'll wake up and it's going to be glass everywhere in the data centers, and we'll say, why didn't Cramer say that copper was gold? What was with Cramer? I mean, what was Cramer doing? And the answer is he was thinking about glass. Okay. Anyway, next week is jam-packed with earnings and economic data. And, of course, SeatGeek is still going to be on. I got some more good tickets from that deep SeatGeek. Mad Money tonight. Is IBM's impressive quarter a catalyst for more growth ahead? I'm looking at what sparked the stock's run. Then I'm tracking the insider buying from the CEOs of RH and Marvell Technologies. Don't miss my take on what these moves could have been foreshadowing. Plus, after Otis reported weakness at the quarter, I got a top brass to see why does that stock ever go down? It's like that is press up. And make sure you have that card. You know, you have to do that. I hate that. You got to show it on it, and then it goes higher. And if, you know, it doesn't, so stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.